challenges for the financial services industry, they're wide and varied. They face regulatory headwinds, and in recent years, banks and credit unions have been subject to a broader principles-based regulatory focus on culture, conduct and accountability. In addition, they face competition from the increasing popularity of digital banks and marketplace lenders. And for them to acquire, retain and grow customers and members, there's a significantly increased need to understand these individuals in a much deeper way than current, and also to provide more personalised engagement and interactions. With better understanding of members and customers, improvements can be made in customer journeys, in member experience, share of wallet, marketing ROI, cost to serve, and revenue per member or customer. Also, the clear message from regulators is that financial services companies must get their house in order. They must be proactive in understanding what's happening internally, and the defensive and reactionary approach to regulation could leave companies significantly exposed. In Australia, for example, ASIC and AFCA are very active in this space. But utilising the AI-based capabilities of conversation analytics, the FSI sector organisations can now maximise their risk governance by analysing 100% of their customer conversations. With our advanced sentiment and acoustic analytics capabilities, the ability to analyse customers under duress, where potential overzealous selling activities occurred, are now very real. This allows financial institutions to forensically ascertain their levels of compliance, understand where risk is realised, and use data-based insights to make significantly better informed decisions around their risk frameworks. So by using Call Journey's solution, connecting the audio conversation data from the financial services voice interaction environment into their analytics ecosystem, organisations in this sector can do a number of things, such as create predictive NPS analytics for every voice interaction to significantly enhance member and customer insights. This is crucial. We see now that many organisations obviously are looking to gain better insights into customers, and they use measures like CSAT, NPS, customer effort. But a lot of the insights and the data used to gain those insights come from things like post-call surveys, which can be skewed because we know that many people don't wait to an end of a call to give feedback, and if they do, it's generally quite skewed, more unsure and unhappy versus really happy, and you really miss that sort of rich bit in between. But from thousands of customer conversations, they can now supercharge customer journey strategy by being able to define and manage new segments and cohorts and behaviours. And also with voice data being added to the data mix, you can gain insights into things like triggers and events to improve marketing ROI. So, for example, if someone calls an insurer and talks about they're about to have a baby, that would be a great trigger for a life insurance campaign. And then by the insights and triggers and events you can gain from conversation analytics, you can be more targeted, and personalisation becomes a real true solution for insurers to their customers. And by doing that, you increase revenue per customer by really better understanding opportunities via conversations. Additionally, you can assess customer sentiment across contact channels with voice data playing an integral part. As I said before, automate QA processes to assess 100% via voice interactions to manage things like, again, culture, conduct and compliance. Track virtual real-time agent engagement via voice emotion and sentiment analytics. Create more effective predictive fraud assessment. So at the claim stage, for example, is the claimant calling a fraudulent interaction or not? Is it real? And then ascertain the context of voice calls for key events like coronavirus. In fact, this is a great example. We know that some of the biggest impacted sectors from our global health crisis are banks, credit unions and insurers. Our banking and credit union customers are seeing significant increases in their customer-facing financial hardship. They're asking for deferments, loan restructuring, credit alterations, and even complete loan distress. Artificial intelligence is likely to play a major role in predicting against and responding to the crisis, enabling banks to implement debt restructuring efforts that will ultimately achieve better outcomes and more satisfied customers and revenue protection. Take the example of a typical bank, financial lender or a credit union. In the current environment, they know their customers are calling about COVID-19 and its impact, but what they don't know is who, why, how many, how often, and what's the context of the calls. So putting it grimly, they can't get a quantitative and qualitative handle on the customer exposure. How do you triage and remediate a distressed customer base without first being able to forensically analyse the impact and to who, how and why? So with conversation analytics, this industry can now speed up the remediation process by triaging the base and understanding what effort to put where first. In effect, customer segmentation by levels of duress, for example.